here from our team, just in case, anybody has any questions, they can put in the chat and, she could probably answer it so I don't get sidetracked, which I tend to do easily. But, Michael's right. The biggest issue we have in the divorce world is what might be available as a legal option is not available as a mortgage option. And that's why the family law industry is really embracing the CDLP and getting us involved, giving us a seat at the settlement table so that we can come up with those out of the box strategies and solutions that are needed. So that's one aspect of what we do. But I wanted to share with you guys today a little inside look at what some of our CDLPs are doing and why our program is so much different than the typical approaches of knocking on an attorney's door and saying, hey, I can refinance your client's loans. It's not about that. But I want to be completely upfront before I start sharing this concept with everybody, is that what I want to share today is based on what our gold and platinum CDLP members are doing. What I'm going to share today isn't available at every level, and I don't like bait and switches. So I wanted to be totally upfront about this with you guys today. But I want to show you what's possible when you actually take things to the next level and you really embrace being a divorce mortgage planner, not just a loan officer working with a divorcing client. But first, I wanted to share this testimonial. It's from an actual divorcing client that we just literally got yesterday on one of our CDLPs. And the reason I wanted to share this is because this is the work we do. This is the work a CDLP does. It goes further than just doing a loan. You have to, as a CDLP, have the power to change someone's life when they're at the worst point ever. And Carrie, she's one of our incredible CDLPs. I think she's up by you, Michael. But what Carrie Goldring, she helped this woman who survived domestic abuse, financially shattered. But Carrie stood by her, found real strategies, and with Carrie's mediation training, she was actually even able to work with the ex-spouse on making sure that this lady and her children did not lose the home. And this is what divorce mortgage planning is about. It's what we do as CDLPs. We don't just do loans. We literally change lives. And I wanted to share this because it does give a broader, aspect. So many times we see, testimonials come in. Oh, Carrie did a great job. She closed my loan. This person closed my loan. This is a true look inside of what we do as CDLPs and what we can do when the attorneys bring us in early in the process rather than after the process. So I really wanted to share that. But the message that I wanted to share with everyone today is this. What if you can make a six-figure income without even closing a single mortgage loan? That sounds pretty bold of me, to say that, but that's what I want to show you guys today, is that it's not only possible, but we have CDLPs already doing this. If you've ever, worked with a divorcing homeowner in the past, you probably know this sounds familiar, right? You work with them, you provide them, all their different pre-qual options, you're crunching numbers. They say, yeah, great, I understand, the options. And then two things happen, right? They either decide not to move forward for whatever reason, or we all know this one too, right? They take everything you gave them, all that information, the strategies, and they close the loan with Vinny. We all know Vinny. He's the sister's boyfriend's cousin who just got licensed last week. That sounds familiar to all of us. I've been in the mortgage industry for 35 plus years. I know Vinny very well. But we need to get past that. And it was one of the biggest, issues with the CDLPs, even, gosh, I do all this work, I spend hours, I go to mediation, I do this, and people aren't closing loans. They've got a 3.25% interest rate. Who wants to refi to 7, 6.5? And so we continued at the Divorce Lending Association to dig deep into compliance, everything. I'm like, how can we change this model? How can we make divorce mortgage planning sustainable? Because losing deals, giving advice for free, it doesn't work. And so that's what I wanted to share with you guys today, is that, that traditional model, it's broke. That's why people think it's a shiny new object. You have loan officers out there right now digging for loans, knocking on doors, and divorce attorneys, that's a great way to go. But that method is broke. You have to ditch that. I can refinance your clients. I can do their equity buyout. And what we learned to do was to package what we know and what we do into our product. So our knowledge has now become our product, not loans. And our CDLPs are getting paid for these consultations. Okay. And I know you're going to ask about compliance, and I'm going to flat out tell you what we've done is 100% compliant. It's been reviewed by multiple compliance attorneys in many, many mortgage companies. And most recently, we had a CDLP who works for a federal bank in Nebraska. And the bank president was kind of, oh, are we going to be able to do this? It sounds kind of, right on the borderline there. And they happen to have be going through their annual audit right now with the OCC. And so the bank president took our platform, our disclosures, everything, and sat down with the auditor. The auditor goes, yep, as long as they follow this method, this process, then there is zero issues with this. So that was a big, win, getting that auditor from the OCC to say, yep, your platform is right on. So I wanted to address that because you guys are sitting there going, yeah, compliance. Couple other things that I wanted to just address before I share with you a little more insight into our platform is there's two big myths that I hear all the time from loan officers. One is that rates don't matter. They have to close because the court says they're going to close. In my opinion, that's an insult to the client. They're smart, they're homeowners. A lot of times it does matter. And I've seen others, out there marketing that, hey, divorce, it's a great way to, rate proof your business. And if somebody is saying that, that's all you need to know about them. It's not fair. Again, people don't want to go from that 3.25% interest rate up higher. But our job is to bring strategy to the table. It's not to make any kinds of assumptions. And you have to think of it from the perspective of how can we make the overall situation better for this client while still complying with the court orders, just like Carrie did with that victim of domestic abuse. The second myth that I wanted to address is this, and I hear this from everybody. If I'm going to work with divorcing clients, all I need to know is mortgage guidelines. Not even close. If you want to succeed in this space, you need to understand family law. You need to understand tax implications, certain tax codes that we can use. You have to understand the different types of real property division, because unless you understand all of those components, you cannot. She was driving to Jacksonville. That nobody else thinks about. You have to take those blinders off. And I don't know how to mute people.
She told me yesterday.
I'm working on it. I'm working on it.
To get the oil changed.
Oops.
That's when the guy told her what all she needed. And
sorry, guys. I'm trying to mute everybody. My bad.
Hey,
There
Fish,
you go.
bump me up to presenter again so I can make sure that stuff's taken care of in the background.
Okay, I think I accidentally made Jody presenter, but then Jody, you
Oh.
might have to make me host because I think I screwed that up. Okay,
I'll
I
make
got
you
it.
a
I got it.
co-host.
Yeah, I got it. I fixed it. All right, I'm getting there. Sorry. I got it. All right, we're getting there. Sorry, guys. All right, fixed. Except I just muted Jody. Hold on, Jody.
There.
Got it. Okay. All right. Perfect. Sorry, guys.
That's all right. So basically, if you want to be part of the process, if you want to be part of the solution, you need to have a seat at the settlement table. You have to become a member of the professional divorce team, not this third party originator who thinks they can step in and do a loan. I'll give you an example. Let's say Kathy is getting a $500,000 buyout from her husband's 401k. It's typical. Usually they get 50%. It sounds great to her. She thinks, yeah, I can afford a house. I have this money. I can utilize it. But the problem is she's been a stay-at-home mom. She's still not working. She has no qualified income. So the regular loan officer says, gee, Kathy, great bank account, but I cannot help you. You have zero income. But a CDLP, we know how to convert that lump sum strategically into a mortgage and qualifying income because we understand the tax code that allows us to do this. And we could then close that loan within 1 month. So what happens is we saved the deal, we saved her home, and the CDLP got paid for the advice, and the CDLP got paid for closing the loan. Okay. In order to do this and make this successful for you, it has to start with this mind shift, and I will tell you that that's the hardest part for our loan officers, our CDLPs, is doing the switch that they can actually get paid for their knowledge. Or, I'm no longer a loan officer. They're stepping into this new role as a divorce mortgage planner. They come in as a financial neutral, not as an advocate for one party. And they actually are this strategic partner that these attorneys, financial advisors, mediators are bringing in. So the end result is you are not chasing deals anymore. You're actually leading the process with insight, solutions, and that's what makes the difference. So I wanted to show you the math, okay, and make it a little bit real. So if we go back to that 6-figure question, right? Let's say that you want to earn $100,000 in consulting fees. If you charge $1,500 per case, and yes, that's the average that our CDLPs are earning, that's only 67 clients per year, or 5 to 6 cases monthly. Notice I said cases, not loans. Okay. Is my screen not showing?
Yep. I was just going to let you know that, Jody. Sorry, your screen is not sharing.
I must have stopped it
when Mike was playing round the bases with the host. I think you lost the screen share there.
Oh,
there you go.
Okay.
All good now.
Should have told me that, Michael.
I did. I messaged you.
Oh, I don't look at the chat.
Sorry, my bad.
Okay, so let me go back to this. If you want to earn, let's say $100,000, that's our 6-figure, right? If you charge $1,500 per case, that's an average of 5 to 6 cases monthly. That's not a lot. And I said cases, again, I didn't say loans, right? And if you have, let's say, an 80% higher rate from these referrals, you only need 84 referrals a year, okay? That's only 14 strong referral partners that send you 1 client every other month. And I will also share that if an attorney or a financial advisor refer you to that client and they know that you charge a fee and you're approaching this as a financial neutral, that conversion rate is easily 80%, if not higher. My conversion rate is about 90. And the only reason I didn't convert a couple of them is because I knew that they were just fishing for information. And I didn't give them information. I just asked them questions, gave them a little bit more to go back. But it all comes down on the trust factor from that client. If their attorney says we need to bring in this professional, they're like, okay, and most of the clients say to me, well, where's your payment link, right? But I want to break this math down for you even further. Let's say that you take a very strategic approach with the 5 divorce cases monthly, $1,500 per case, that's 90 grand in consulting fees. Do 6, you're getting up there further a month. Let's say that then 75% of those consulting clients close the loan with you. And if you assume a commission of, let's say, 5 grand, per loan closing, that's another 225 grand in mortgage commissions, and when you combine the consulting fees with the commissions, that's where you get back up to the typical, income that really good loan officers are used to earning. And this model works. And if you see, on the table, if you, doing 10, 15 a month, that's a pretty big wow factor. And one common question, we get is, well, do I charge every client, a consulting fee, even though I know they need a loan? And I'm going to say no. Our approach is it depends on the needs of the client. If they come to you and they're like, hey, Jody, I'm ready to refinance right now, I'm ready to buy, then fine. You put on your LO hat and you do the loan. But if it's just the opposite and they're early in the process and you have to meet with the attorneys, you have to do these analysis, you have to provide the divorce mortgage planning report, that's hours of work. You put on the CDLP hat and you start charging the fee for that. The other thing I will say is I know that some of you pull numbers on our CDLPs to say, okay, well, is their production that much higher, than others? And I will tell you that those numbers aren't fair to look at. If you take one of our super strong CDLPs in the Denver market and you look at her numbers over the past, few years, she averaged probably 80 million her low year. She's always been a Scotsman top 100 originator. If you pull her numbers for 2024, there's a big fat 0 there because she's taken the high impact approach and all of her loans and her referrals go into her daughter's name. If you look up her daughter, she closed 80 million last year. So you can't judge those numbers and apply it to this model because you don't know what that CDLP is really doing. But the big factor here is that you're not chasing loans anymore. You're beating out Vinny, and it's because they will close that loan with you because you've already built in the trust, and you're not chasing the loans. That's the big thing. And you're not working weekends. You're not doing pre-approvals at night because that's not what we do. You go on vacation, cool. You can go. You just tell your attorneys, hey, I'm going to be out next week. And they're not going to call the next person they know because they need a pre-approval right now. So I know a lot of you guys are thinking, really, is this really accurate? Is this actually available? What do attorneys think, when they hear that we charge for our fees? I will tell you that even we were surprised when we first rolled this out. We were like, okay, what's the attorney's, response going to be? We've been doing this for free. I will tell you that the typical response our CDLPs get from the attorneys is, it's about time, that they could never understand why we couldn't get paid. And some of them even said that they can now refer them more clients because we're a financial neutral rather than a loan officer, because if the attorney knew that there wasn't going to be a loan there, they wouldn't even bring a CDLP in. But now they bring a CDLP in because they know that there's a lot more involved into it. And the other kicker is this: when we charge a consultation fee, they know that our income is not based on the outcome of the divorce. And if we have to go to court as an expert witness, the other opposing counsel can't argue that the options we're providing are only so that the client can get a loan and we can get paid a commission. So it's a completely different approach. And if you think about this also, how can you work with all these referrals and still, only work with the ones that are gonna, pay the fee and then close the loan? It's number one, when somebody pays the fee, you're filtering out those who are uncommitted. The ones that pay the fee are going to put together and really adhere to the solutions that you bring. Again, it brings credibility because, like I just said, our income is not based on the outcome of the divorce. We really become that trusted advisor, that's thrown out there so much. And it builds a strong reputation within the industry. Attorneys retain us directly. They don't just let the client retain us. So the attorney pays us and then they bill the client. So attorneys are approaching this, completely different. But here's the thing. Only a few very small percentage of loan officers are willing to take this step. Some think that, wow, this is way over my head, or there's no way I can commit to this, or they just can't get out of that MLO, mindset that there's so much more they can provide to our industry. They don't have to just sit there and close loans. They're no longer part of the housing industry, if you will. They become part of the family law industry as a financial professional, and it is. I coach them all the time and I'm like, stop thinking like an LO. You have to get out of that mindset. The cool thing is, you don't have to learn this divorce mortgage planning platform on your own, or, the family law aspects, everything, because we do it for you. We have education, coaching, marketing. We have the tools and the resources, the reports that the attorneys want to enter as evidence or make that part of the settlement agreement. And if you think again that all you need to know is guidelines, and that's all our program is, I will flat out tell you that less than 20%, is probably 15% of our curriculum is actually on the mortgage. And my opinion is, if you want to approach this from the perspective that you need to, you should already understand guidelines. If you don't, this is nowhere near where you should be, dipping your toes in. And it's that big world, outside of guidelines that makes the CDLP different. And I'm just going to get in there and share with you guys now, what we offer, et cetera. And then if you guys have questions, I can. 3 different learning paths for the CDLP. Each one of them is $24.95. And they all include our business development track, which really teaches you, it even gives you the materials to reach out to the attorneys and offer them real value, not as a loan officer, but as a divorce mortgage planning professional. And we even have a pay over time, with Klarna, if that's more manageable for everyone. But if you, like structure and moving fast, like get it done, we have a accelerated hybrid class that gets you through it in 1 week. There's a schedule to it. We jump on 3 discussions that are live to help you actually put everything into play, answer questions, etc. I think we have, what, Lynn, 7 seats left in that, I think. Also, if you like learning live best, in May, we're doing a live virtual brain meltdown. It's over a 2-week period. It's 3 or 4 hours a day, 3 times 1 week to the next. So that's an option we do. And then, if you're disciplined and you want to do it at your own convenience, we have a full e-learning platform available. But like I said, it's not just the education that we provide. That's only a piece of it. You know, we provide the coaching, the business development, the marketing, consumer leads that we get all week long, and tons more. It just depends, you know, on how much you want to succeed or how much you want to, you know, invest into your success. But just I mentioned at the very beginning, the CDLP hybrid business model, which is our consulting model. It is available only to our gold and platinum members. And again, you know, if you guys are interested, if you want to join us in April or May, you can go to getcdlpcertified.com to learn more. You can download, there's our program brochure right there, which outlines all of those numbers, you know, everything for you. Or, you know, you can schedule a strategy call on our website also and talk it through with one of our team members, most likely Lynn or myself, and we can answer your questions. So Michael, I appreciate, you know, you letting me on. I tried to stay within my 30 minutes. So I rushed through a lot of it, but I wanted to not go so much into what CDLP teaches, et cetera, but give everyone a broader view of what's actually there for the taking, you know, if they truly, you know, want to grow their business, something that's sustainable, that's not slowing down. It's actually growing. So
Yeah, a couple of folks are asking questions, and one of the questions I like, because I've heard this one a bunch of times, and it's like, well, if I do this, you know, am I walking away from all my realtors, and
nope.
you know, am I getting rid of that part of the business? And you know, yeah, you and I both know what happens if you add more business. Cool, you hire more help, you have another loan officer doing the deals, you get an LOA, you have more business, there's more revenue, you can afford to hire people to help you. It's a great thing, right?
You know, we get that a lot. I mean, it's how you manage, you know, your team. We get the question, well, this would be great. I can take leads back to my realtors. It's like, yeah, you can, but don't approach this as from that perspective, because you enter the divorce process very early. A realtor is only going to come in if and when they decide to sell the house. And I've seen relationships ruined because these promises and expectations are met. It's a different route, you know, that can feed back into your realtor business, but it's something that's independent and they respect you. You know, it's a very loyal industry and I love it, but we have loan officers who do both. You know, it just depends how far you want to take it. You know, you're already networking. You're just starting networking in a different backyard.
I know you've often kind of cautioned LOs from getting too tied up with the realtors and the attorneys, because sometimes the realtors and attorneys don't understand each other. The attorneys see that the realtor is just a salesperson
Mm-hmm.
and not somebody trying to get to the end of the, you know, the financial plan, if you will. And so that kind of frustrates the attorneys, like, hey, this isn't about making a sale, it's about doing what the client, you know, what's right for the client, kind of thing.
Yep.
So sometimes it's a little hard to combine the realtor in the middle of the divorce process like that, outside of like, okay, what's the house worth, how quick can we sell it, that kind of stuff, right?
Yeah, you
But
definitely do not partner with a realtor on the marketing, because if you partner, you're a sales team. If you approach this as a one-off, this is me, this is, you know, Lynn as a certified divorce lending professional, this is the value I bring. Once you walk in that door with a realtor, you just cut your nose off to spite your face. So, and that's not to say don't bring a realtor in, set the proper expectations, you know, because I'll say probably 85% of the time we're brought in to save the marital home, not to sell it. And they want the sale. So,
yeah, and they don't like hearing about things like, you know, we were talking about last week, VA assumptions, like, oh, I don't want to hear about that. You know, I don't, you know, well, they need to sell this house. Well, no, what if they do this and that and this and that? They can keep the house, kind of thing. Uh, so hey, you can unshare now if you want.
okay, cool.
Show everybody your smiley face there. So, all right, we did get TJ on the call here. TJ, say hello, hop on. Let's you always have a good perspective on bringing in business. What do you think about all this stuff, buddy?
Well, I did come in a little late, right? So I missed the beginning, and I apologize if this was already addressed. But I mean, I was just really looking at it, as such a unique way to be able to maintain our lending business,
Mhm.
right? Because I know that's important for a lot of us. We put a lot of time and energy and years into building our lending businesses, right? But provide an additional service, but also, like you say, get back to some of the income that a lot of us are missing that we've gotten accustomed to over the years. I was on my our division sales call earlier today, and one of the things that was stated was one of the reasons why we're having a lot of problems is because we did 5 years worth of business in 2 years,
Mhm.
right? And now we're catching up to it. So even people who had there's a lot of folks that we've worked with who had really great businesses before COVID have seen a reduction in what they're accustomed to. Like a lot of them are saying, if I could go back to 2019, I would be happy. I can't tell you how many times I've had that conversation. Just give me back to 2018, 2019. I'm looking at my numbers. I was like, oh, I don't want to go back to that. Right. So, but so seeing that ability to go ahead and maintain our mortgage business, maintain what we've been putting so many years into, provide a great service, and come back and start to build our incomes back up to where a lot of us have built our lives around. Like I said, pre-2020, that was exciting. That was exciting.
Yeah.
Yeah.
No, I
So,
will tell everybody, I want to caution everyone, what we've built, this hybrid platform, it is a very structured, highly disclosed way of managing that part of your business. You don't commingle the two because that's where you cross the line into RESPA and Reg Z. We keep it separate and we manage it in a very specific way. And that's why it is compliant.
and let me jump in real quick, but it's got to be run as a business too.
Mhm.
Right. So that's certainly, I think, a lot of times my marketing brain picks up and starts saying, how can I leverage this to have more conversations and more one-on-ones and get more referrals?
Yeah, you
But
don't
from what I'm
market,
saying, this is a business.
you don't market yourself as a loan officer.
Yep.
You market yourself as a divorce mortgage planner. You separate the two businesses
Mhm.
because once you come, and this is the same business model that CDFAs, follow, certified divorce financial analysts, because they cannot offer wealth management programs while they are doing the divorce mortgage planning part. So it's a very highly compliant thing. We have to follow a set of procedures and literally you don't skip one disclosure, or one process, because that's where you bump. But if you seriously want to take it seriously, then you do become disciplined and you do take the steps to make it. But that's why you can then garner these cases that literally, I'm not kidding you. When I get done with a conversation with a client, they're like, well, just send me the payment link. I'm like, okay. And then one lady said to me, well, can I have the weekend to think about it? I'm like, absolutely. There's no pressure. I sent her the link and with my services guide, I'm not kidding. In 2 hours, the money was in my bank account.
So I will say this, and again, then I'll shut up here. But just on your strategy alone,
Mhm.
and I never signed up, I've never joined, I've never gone through your course, I've done a couple webinars with you, but in my office, I share an office with the divorce attorney, and him and we talk about sports all the time. And I just a couple weeks ago was talking to him, and I was like, "You ever work with loan officers? Because I'm constantly hearing you." Talking about the house and talking about this. And I was like, why don't you ever come and talk to me? He's like, you've never come and talk to me. It's like,
Yep.
no one officer's ever approached me about needing this service. So while I do think there's probably more people doing this than there were, I see this as a blue ocean. I really do.
Totally. Yep. And think about it from a numerical side. 70% of all divorces in the United States involve real property.
Right.
But they don't all need a loan. A lot of them are trying assumptions. One of our divorce mortgage planning services is helping them facilitate the assumption. So a client comes to you, well, I want to assume the loan. Okay, well, I can't help you. Now you can charge for them and you're setting them up so that if, and typically when the lender comes back and says, no, sorry, you can't do it, then you're sitting there ready to help them move forward to refinance the mortgage. You know, you have to think beyond the loan, you
Right.
know, and see it as an opportunity to earn this by helping them do this. And then maybe it comes back, you know, and I will also share this one last comment. Divorcing clients are loyal. You guys think first-time home buyers or your second-time clients are your most loyal people? You're dead wrong. You help someone who's going through, take Carrie's client, the domestic violence survivor. She will be Carrie's biggest marketing billboard for years and years. Carrie will see so much business come to her because she helped that one person who was hurting succeed.
Yeah.
And that's what we're all about. That
Well-
has to be your approach and your mindset.
And the opposite is true as well, Jody. If, you know, a divorcing client doesn't get good advice from an attorney or a loan officer, they're never going to work with them again. You know,
Mhm.
I ran across a few folks who were in the
Neither will
middle.
that attorney.
Yes, exactly. That who got bad advice from their attorneys or whatever and couldn't qualify. And they're like, I will never work with that attorney or that loan officer they sent me to ever again for the same
Mhm.
reason. I got one last thought here. Let's close it up. But it's something that I talk about a lot in the programs that I run with Veteran Mortgage Advisor, and some of what you talked about today sounds really difficult. It sounds like a lot of work. It sounds like, oh, I got to learn some things about property law and some things about marital law. This sounds really, really hard. Yes, absolutely it is. But what I will leave you all with is when you do the harder things, your life can become easier because most people aren't willing to do the hard things. And, you know, yeah, it's really easy to go buy an Earl list and call the Earl list and market for Earls, and Earls are easy. Cool, great, fantastic. Let's go get a bunch of Earls. But now we're in, like TJ says, this red ocean with a bunch of sharks, all just trying to be marketers and salespeople versus, well, I'm going to learn something that's probably going to take me 40, 50, 60, 70, 80 hours to master. But very few people are doing this. And when I get really good at this, it's going to be easy for me to stand out. It's going to be easy for me to make these connections because people will know right away that I'm different than the rest because of all this extra work and education that I've done. So
Well,
I
I'll
just
say that attorneys, they will tell us flat out that I can tell when I'm talking to a CDLP versus a loan officer
Mhm.
because of the words we use, you know, and our thought process and everything. So our community is awesome. You know, they support each other. They don't compete. Yeah, they're competitors out on the street. But I think that community sense and working together bodes well for us in the industry because they see us. It's a small industry. It might be a $50 billion industry every year, but it's small. But it's one of the most loyal. And the last thing I promise is you can either be in the divorce business where you're looking to make money off of divorcing clients, or you can be in the business of divorce where you're actually in there trying to make a difference. And we do not want to be in the divorce business. We want to be in the business of divorce where we can actually make an impact on our clients' lives.
I like it. Good stuff. Appreciate you. We'll put the replay in
you.
there. Folks want to reach out to Jody. She put the link up there a couple times, but you know, maybe you can drop it in the chat again. Any other questions? You know, it's pretty easy to get a hold of. You and Lynn are awesome. So
Yeah, just go to getcdlpcertified.com and it'll take you right to our website. So it's easy.
cool.
Awesome.
Appreciate
Thanks again,
y'all.
guys.
And for those of you that are, you know, just still hanging out, watching us chit-chatting, we're trying to do more in MLO Net, so we appreciate you guys hopping on the calls. If you have an idea of something you would like to see us do soon, feel free to share that with us.